Maybe you don't know, but the Volatility Index is a very useful tool in order to understand if the recent drop on the stock market is a long-term bear trend or it's just a correction. Let's have a look to the VIX.
It's a very interesting index because it measures the volatility of the market. Very easy, everybody knows it. What's important to understand is that, historically speaking, when we have a huge spike in volatility like the one we had in the last days, the drop in prices for the S&P 500 is probably a correction. If we compare this spike in volatility index to the 2022 period, we can see a very different behavior for the volatility index. Here we have a spike which rised a lot in just 2 days. Here we have a very slow movement. And look what is happening. If we go back to the S&P 500 chart, we can see something really interesting, because if we go back to 2022, here we had a real downturn, a real downtrend. If we see what happened to the volatility index, we can really understand that we didn't have such a spike like the one we had now.
So, when we have a spike on the VIX index, the drop on the stock market is probably only a correction. Let's have a look to another example.
If we go back to 2020, we can find exactly the same situation. Of course, we had greater volatility because the COVID was such a huge problem, okay? But if we go back to the S&P 500, we can understand that even with a big problem like the COVID pandemic, the recovery was very fast and everything started from the beginning of the drop. If the beginning of the drop start with a huge peak in volatility that you can of course measure with the SIBO volatility index, the market will recover very fast. This is why I think we are in a correction and not in a downward movement, in a long-term downward movement.
Of course, markets are made by companies, and thanks to the forecaster we can calculate which is the intrinsic value of the S&P 500.
The S&P 500 is undervalued. Talking about fundamental analysis, talking about security analysis, doing the calculation of the intrinsic value of every single company listed in the S&P 500, we can understand that on average we have an undervalued index, undervalued by more than 10%. So this is not the kind of index that can drop too much, because it's still a bargain, okay? It took 5 days, 1 week of drops to be again below its fair value. If we combine this information, which is the spike in the volatility index, the fact that S&P 500 is undervalued, we can really understand that probably this is just a correction in a long-term bull trend.
If you like this video, it's an extract of our free weekly webinar, where every week we share our best trading and investment ideas. You can join it for free, you can find the link in the description. I also invite you to join the Forecaster terminal. You can try the software for free. It's a very powerful tool you can use to analyze all the financial instruments all around the globe. You can find the link in the description too.